Hello trade pros, and welcome to our second segment of our three-part series talking about secret trading indicators and what the professionals use to earn a consistent income and extract profits from the market. Today we're going to talk about secret indicator number 2, market delta, and what it means for us as traders, how we could utilize it to pick reversal points and opportunities to find areas in which present low risk and high probability trade setups. That's what we're going to talk about today. I'll walk you through this video and I'll introduce you to this new concept you likely haven't heard. My name is George Papazov. I am the owner and founder of TRADEPRO Academy here, and I've been trading since early 2001, navigating through currency markets, options, stocks, futures, and even options on futures and stocks. And I'll take you through this indicator. I'll give you the inside details of how to use it and tell you where to find more info on how to use it like a professional trader. Okay, before I start, though, I have to remind you the information in this presentation is for educational purposes. It does not constitute investment advice. It does not be taken as a recommendation. The risk of trading markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. TRADEPRO Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. All right, well, now let's begin. Let's get started. This new indicator that you're going to learn today, you've likely never heard of before. It's called market delta. The term delta means change. All right, it is a Greek symbol, and it is defined by the word change. It just means a change. So it's a change of the market, but what's changing? Wouldn't you like to know when a certain price level represents net sellers or buyers? Wouldn't that be an important concept for you to know? Well, with market delta, you know when sellers are entering the market and when buyers are entering the market. How do we know that? We know that by the aggression, okay? The aggression through which their orders are placed. Now, for every single transaction, there has to be both a buyer and a seller. We know that much. But what if a seller was really aggressive? If they were selling aggressively at market prices while the buyers were using limit orders? What you would see is there's a matching of orders between buyers and sellers, meaning that there is a transaction, but the sellers are actually selling more aggressively than the buyers. The buyers are more passive and can pull their orders at any point, whereas the sellers are more aggressive and just hammering the price lower. And despite there being a transaction, it's an exchange of aggressive buyers or aggressive sellers selling their shares into more passive buyers. And you can spot that in the market. We could define that, and we have an indicator to help us do it. It's not a moving average. It's not a pattern or chart pattern, head and shoulders. All that stuff might have worked well in the 90s, but in 2017, it's a different world out there. We need more information to be profitable as traders. The classical technical analysis doesn't work to the same extent. It's nice to have, it's nice to know, it's a good tool, but you can't make money just with that alone. You need some more of these indicators, and that's what we're going to talk about, secret indicator part 2. Let me just take you to a chart at the moment. And what you're going to see here is a chart of the S&P 500 futures. All right, and these futures basically represent the S&P 500 index. It is the 500 large cap stocks of the United States. What you see here on the right, you might recognize it's a volume profile of price, but what you may not know is on the left side, you're able to generate a chart on this platform that shows net sellers and net buyers. Let me zoom in for you here and show you what I mean. All right, in the morning, about 4 a.m. on the open here of the European session, around 3 actually is when London opened, you saw sellers start to come in and push price lower until it hit 22.84 on the overnight low session. Once we've identified that overnight low and we look at the profile, we ask ourselves, where are there sellers in this price action and where are the buyers? And if you look on the left here, if I just zoom out and move this, you can see it shows negative 8,636 and negative 5,000. If you combine the two, that's a little bit over 13,000, closer to 14,000 contracts that are net short. How do we know that they're net short? Well, they're negative. That means that sellers are moving in more aggressively in the market. That's all you need to know. And at this price level, they were selling in the European session. Well, what ended up happening around 9:30? The price opened at 86.75 on the S&P 500 futures. We did a quick little rally, and wouldn't you know it, this is where we failed. Why did we fail at that level? And if you look at that level is 91 to 90.75. Those two ticks. Why did we fail there? Well, think about what happens if you're a seller in the European session with your price now coming right back to the initial zone. If you were a seller here heck, you're going to be a seller again at that same price. Sellers are going to rush to come in and defend that zone. And then you could see that level once again work. We rejected this level. We caught our short here in the morning with our trading community in our live trading room. You can see all of our trades. If you sign up for a 14-day trial, you could trade with us and you could see every single trade that we do, including our profit and losses for the day. Well, then what happened? We bounced off these 87.5s, which are also a key level, which go above and beyond the scope of this video. But when you see the rally, where did it fail? It failed a second time right to that net selling level. And prices continued lower. So what you could start to paint the picture from here is say prices below this level, therefore it is a support for sellers and a resistance for buyers. So when we get into these net selling zones or selling imbalances, as we call it on the delta, the negative delta, what you could do here is start to put some offers in and short this market to ride back into the direction of the trend. Now, let me give you the flip side perspective to that. If you were a buyer looking for a breakout trade, if you're saying, I want to see this breakout, if you bought down here and you wanted to break above this level, what you have to say is look at the flip side and say, look, there's a lot of sellers here in this zone. If we could navigate above 92.5, guess what's going to happen? Everyone that shorted here and here and here, what are they going to do? They're going to do what we call in the business puke. They're going to get out of their position. They're going to puke those shorts. And to get out of a short, you need to have a buy stop, and it's going to run price higher. What's going to happen is these shorts here, here, and here are going to start to chase the upside movement to close their shorts above these levels. Above these levels, buy stops come out, not from buyers getting in on the trend, but from sellers rushing to the exit to get out and chasing the price higher, and they're forced to buy it higher and higher and higher. So the way these things work, wherever you see a positive buying delta, you can expect buyers to come in here and build some positions long. And you've seen that happen through the first little bit of the session, till about 11 a.m. But as soon as we navigated through that buy imbalance, here you can see it. Here's a buy imbalance at this level. Buyers are showing up, holding the support. But when we broke this support, you start to see stop losses come out very quickly, the sell stops. So these sell imbalances and buy imbalances in zones form a very accurate support level. And I can't tell you how few people know this information and how much or how fewer people actually use it profitably and successfully. This is a massive advantage that is given to you. You have to use this information. It's very important for you. And when these levels click with other levels, it becomes an even more powerful indicator. That's why it's a secret indicator. The other aspect of this indicator that I wanted to show you, there's delta, or the net change of sellers and buyers at a price level. You can see on a horizontal scale, you see one bar for every tick that it moves. On the S&P 500 futures, it's a quarter point, is 25. 0.25 is one tick. That's the lowest denomination of a movement that can happen in this futures market. Each tick is a 25 point move, or a quarter of a point of a move. And it's $12.50 per contract. So if you have one move, you make $50 out of 1 point, and it's 4 quarter points, or 4 ticks. All right, well, we see buyers and sellers here horizontally. Now we know how to use these as supports and resistances and how to find stops on a chart, where shorts are going to exit, where they're going to enter, where longs are going to enter, and where longs are going to exit, just by simply looking at this delta on the left side. Another delta you need to know about is the cumulative delta for the day. And the way this chart works is it adds delta by candle. All right, it takes one candle, second candle, third candle. And if there's a net sell imbalance here on candle 1, let's say candle 1 here, it's a sell imbalance. Actually, let me take you through here. Candle 1 here, you can see some buy imbalances. It goes sideways. Candle 2, you see it's a sell candle, but it didn't look like new sellers came in because delta was flat. And only in through these candles here, 3, 4, and 5, can you start to see the cumulative delta start to pick up. What that's telling you is that buyers are now starting to enter the market. You're not looking at buyers on a price level, you're looking on buyers on a time scale and a progression of a trend. So if this delta is moving upward, you could start to see price or expect price to move upward. So I love using this as a divergence indicator. For example, at around 1:40 p.m. today, we got long on the S&P 500 futures using this very same indicator. Why? We had one low, we had a second low, and despite matching lows on price action, you could see that the cumulative delta started to swing higher. This is your classic divergence pattern, which tells you, despite there being selling enough to push it to a equal low, buyers are actually shifting and starting to buy more aggressive. These sell-offs are starting to be better opportunities for aggressive buyers than aggressive sellers hoping to continue the trend lower. I hope that makes sense. If it doesn't, feel free to email me, Georgia Trade Pro Academy or Info Trade Pro Academy. We'd love to help you out with your questions. I definitely encourage you to sign up for your 14-day free trial. We have a lot of education on this one lesson. We have literally 95 minutes of content plus on this Delta concept alone, on how to apply it, how to get the software, how to plot this thing, what it means, a lot of other important factors, and more importantly, how to make money with this. That's the most important thing. How do you make money? Well, I had the opportunity to get long here because these lows, sellers were pushing price lower, but buyers were actually starting to move in. Why is that? They were eating up the sell imbalance. It started to swing more positive. There's so many more ways to use this. There's so much more data. This is an oversimplification of it. But what you need to know is you have to start using delta, market delta. You have to start studying and analyzing buy and sell imbalances and what they mean. And you have to look at cumulative delta for divergences if you're going to make money on a consistent basis in the futures, stock, or options market. In fact, even in Forex, these principles can be very helpful for you. You guys have yourselves a wonderful day. I hope you've enjoyed this video. If you have any questions, please reach out to us, and we'd love to see you in our free trial. That includes access to all of our courses, stock courses on the fundamentals of how to trade, or the foundations course it's called. That includes the options course, which is 9 lessons on different option strategies to generate income, profits, and to give you consistent success in the market. We also have the futures course, which is a little bit more in-depth. It's proprietary level trading and training in one package, bundled into one area for you, with quizzes, with live trading sessions, and more. And you have your live trading room that you could access. We're there every day from 9:15 in the morning with our entire community. You could ask questions, post your analysis, get feedback, and it's essentially a virtual trading floor that has a lot of profitable traders that can help you, and you can help them as well. It's a community feel, community atmosphere. We start at 9:15 every morning. That's included with your 14-day trial. You have to get an earn package membership. Click the link in this video or the link in the email containing this video, and you can find out more. Have yourself a great day, and I hope you found this information useful and you can apply it to your trading to be more consistent and more profitable. Until our next video in the third part of the series, I wish you a great day, all the best, and I'll see you soon for secret indicator number 3. Take care and goodbye.